Welcome, everyone. Good morning, good afternoon, or even good evening for our panelists from wherever you hail. Thanks so much for joining us, and a special welcome, as always, to our members and CFCS certified professionals who are tuning in today. We have almost 900 professionals who registered. No pressure, gentlemen, on this panel today from countries all over the world, highlighting the importance of our topic. What is our topic? 2022 Global AML Compliance Trends. It's December, right? The time of year we look back, sometimes in awe and wonder as to how the years pass so quickly. Again, I know I do, and review what's occurred. We perform analysis of the events, topics, and trends that unfolded over the last 12 months. We ask ourselves, how can we arm ourselves to do better in the coming year? What did we learn? How can we do better? We'll address these questions in Feedzai's Global State of AML Compliance Report and how it applies to your job today. But first, who am I? I'm Erin O'Loughlin, Senior Director of Training for the Association and moderator for today's session. Before I introduce you to our awesome panel, we have to go through the boring stuff first. I got to convey information to you that is worth listening to. Troubleshooting. This is a web-based platform. If you're having any type of audio or visual issues, if the music is still playing in the background for when you're coming in from the waiting room, refresh your browser. If there's any kind of video glitching, freezing, refresh your browser. If there's any problem with any type of audiovisual, first refresh your browser. Try closing out other tabs and applications and then rejoining the presentation. That usually helps as well. Make sure that you're on Chrome or Firefox. All right, the logistics of today's session. A certificate of completion will be available to all webinar attendees. The recording and the slides are available, and other resources can be available within 3 business days. You can also download the resources and the slides that are somewhere on the dashboard. As I do this, you can move them around in the widgets on your dashboard, and you can go ahead and record those. The slides should be there. Post-webinar survey. Let us know how we're doing, how this one went, what you'd like to see in the future. We do read these, we do take them to heart, and we can create and craft unique content based on your feedback. Speaking of feedback, Q&A. Type the questions into the Q&A box. Again, wherever you have put them on your dashboard, you can move things around. Type them into the Q&A box. There will be time allotted at the end for dedicated Q&A, but we do want to hear from you throughout. Go ahead and write us anytime you'd like, and we will get to them. Without further ado, this is the good stuff. Meet our speakers today from Feedzai. I'm going to butcher his last name, but I'm going to try because I'm all about effort. Rui Cachorreiro, Product Manager for Feedzai. I know I screwed that up. And Nick Parfitt, AML Subject Matter Expert for Feedzai as well. Rui, tell us a little about yourself and really pronounce your last name for me because I know I messed it up.
It was quite close. So it's actually Rui Cachorreiro, a Portuguese name. So that's why the pronunciation may be a bit hard. So I product managed at Feedzai for the last 4 years, working on the compliance side of things, helping to building the AML suite transaction monitoring solution, payment screening, as well as the KYC and Know Your Customer solution. This has been my path for the last 4 years. And for the last kind of 10 years or so, I've been working in the payment industry with supply chain, all of the payment checks and invoicing. That's been my path, moving from the payment world into the compliance world in these last 4 to 5 years. And that's basically my background.
Great, thank you. Thanks for being here. Nick, what about you?
Yeah, thanks, Erin. Yeah, hi, everyone. My name's Nick Parfitt. So I've been with Feedzai now about 6 months. So I'm relatively new to the organization. I've had about 12 years in the AML world, having worked at various Big Four consultancies, a stint in one of the UK banks as well. So I've been fortunate enough to really see the full gamut from policies and procedures all the way through to technology and controls for all of the core components of an AML and KYC program, including reviews of a tier 1 compliance program across many different jurisdictions. So about 12 years in the industry doing that, but a career of 2 halves. I first started my career really around big systems implementation for ERP type products such as SAP and Siebel CRM. So I had about 10 years doing that before getting into the wonderful world of anti-money laundering and financial crime compliance.
Great, thank you so much for being here. Let's get into the topic itself. Today we're going to talk about your Feedzai's report, the global AML compliance trends and report that you have. When it comes to Money Mules, is talked about a lot in here. It plays a pretty prominent part in this report. What is driving all of this? Nick, what say you on this?
Yeah, thanks, Erin. Well, just maybe just set the context, just to give everybody a little bit of understanding. This is a global report that we produced, which went out, I think, October of this year. In terms of its scope, we had 630 odd respondents across the various jurisdictions in the world, responding to 19 questions over 4 categories. So what we've done here is pulled out some of the key findings that we think are really interesting. The link to this report will be included in the webinar as well. So I would urge you to look at the full report, go into it in more detail, because there's a lot more than we're going to be able to cover today. And also, we break it down by comparisons with various regions. So what did the answers look like in North America versus APAC versus EMEA, for example, as well as we've taken a stab at breaking down by role as well. And I think there's some interesting findings there in terms of the executive or the top of the tree's view of compliance and how programs are working compared to people on the ground, the analysts, the day-to-day, KYC type functions. So I would urge everybody to have a look at that. But back to the question, yeah, thank you. The Money Mules is something that we are seeing a big increase really in the UK as well. So it was interesting to see that this was common in terms of respondents on a global basis. A couple of components to this. I mean, what's driving Money Mules? Well, we have to be cognizant that you either have witting Money Mules, i.e. they know that they are part of a network that's laundering money, or unwitting mules who don't realize that they are part of the distribution of funds within the financial services and opening up their bank accounts in order to facilitate transfers and payments of funds. And that's a really interesting distinction. I think for unwitting, well, maybe for both actually, when you think about it, we definitely in the UK, and I think it's a global thing now, we have a cost of living crisis, which is putting a huge amount of pressure on individuals in terms of their finances and affordability. And therefore, people are very open to essentially get rich quick schemes. Now, that goes hand in hand with a huge increase in scams that we're seeing, particularly in the UK. Australia is picking up a lot, and doubtless, it'll come to the US's shores if it's not there already. People are being duped for scams, anything from romance scams, which is a big scam typology, to the remnants of COVID with things like fake medicines and fake tests, to other scams such as you're owed a rebate, for example. We just need you to enter your bank account details. And I think that's one of the things that is predominantly driving it is the fact that the cost of living crisis is an issue, and also the number of scams is massively on the increase.
So these numbers, 74% of money laundering typologies involve Money Mules, and the 56% of AML professionals cite multi-customer cross-wallet activity as the top money laundering typology. These two numbers, is that any change in, say, 2021?
I think we don't have the numbers to actually demonstrate that. This was the first year that we've done this report, so we will be doing comparison going forward on this. But I think if we were to look at those figures, then they would be significantly higher. I mean, the first one is really how do criminals launder, regardless of the typology that they're trying to perform. How do they actually then launder their money? And muling is clearly on the increase for various reasons, as we sort of cited before. But the cross wallet, the multi-customer cross wallet, is generally quite specific to crypto. And I think were we to do this report in 6 months' time, what would the potential impacts of the likes of FTX, which I'm sure most people are very familiar with, and the repercussions? I think we're only just beginning to see what's going to happen, particularly when the auditor from Enron said that his view was this was even worse than Enron. So we'll have to wait and see what happens with that. But certainly the opacity when it comes to crypto exchanges and the ability for the exchange to allow transfers of essential monies between various customers and various wallets, which in a family environment would seem absolutely fine if you're moving money, within a family environment or members of a close group. But organized criminals take advantage of this. And the thing is, the exchanges don't record what those internal transfers actually look like. It doesn't actually occur on the ledger. So that's why there's a real black hole here in terms of being able to see how the funds are actually mingling and being paid between each other, and whether or not that falls foul of money laundering rules.
I'm super happy that you brought up the crypto part, because on January 5th, I will be moderating a panel for an FTX case study. So if folks be on the lookout for that. Also, because this is the first report that you've done, we can do this again next year. If folks, come on back, bring a friend, so we can double our attendees list, so we can hear Feedzai's 2022 versus 2023 data. I'll be looking forward to that one. No pressure, right? Rui, what can banks do about all this, the money mules in general?
Yeah, that's a good question. I think we don't have the results from last year, but I think the perception is that this number has gone high from last year and comparing to previous years. And that's mainly due, I guess, to the pandemic and to the change of the interaction between customers and banks, where it was used to be a physical interaction, a face-to-face interaction. Now, due to the pandemic, this changed to a more digital interaction. So onboarding processes are not physical right now. It's a digital onboarding process. And that has opened the door to bad actors getting access to these kind of services easily. It's not just this, it's also the proliferation of diverse multiple payment types. It's not just the crypto or the digital assets. Also on the fiat world, there is a lot of new payment types that come to make life easier, but at the same time, open the door to perpetrators or bad actors to actually get laundering activities easily and off guard. But what can banks do to cover this? So I think this is all about looking into the holistic view of a customer. It's not just doing fraud on one side and doing money laundering on the other side. It's having those kind of diverse, and these kind of departments need to interact more. More synergies need to be made. We need to watch out the customer since he is onboarded, and from the all the life cycle of the customer, that life cycle journey. So onboarding, so doing the periodic reviews on the customer. The KYC process cannot be anymore a thing that we do every 6 months or every year. We need to do this more on a daily basis or more regular cadency, so that to keep track of any changes on the customers, we can anticipate as much as we can deviations of what is the normal or the typical behavior to any kind of suspicious activity as fast as we can. And there are other ways to kind of address this. I guess the first thing is to have like a 360 view of the customers, keeping everything up to date, doing these periodic reviews on the customers. And I think we'll cover some of those topics later. And also the big challenge would be, because onboarding is kind of getting a big impact on then the entire life cycle of the customer. The onboarding is a tricky subject, because at the same time, we need to request all the information that we need from a customer, but at the same time, it cannot be too much information, because this will cause friction, and the customer can very easily go away and try to get access to another service. So it's this sweet spot of, do I have enough data to do a proper validation? Should I onboard or should not I onboard this customer? I'm confident enough at the same time that I need to make the experience of onboarding to the digital customer as smooth as possible. So I think we are dealing with a lot of synthetic fraud and impersonification, and this is kind of like have a big impact on the fraud side, that then gives the tools to perpetrators to actually do the money laundering more easily. So this is something that in terms of financial, in terms of the industry, it's where we need to improve, is where we need to make our process more robust.
That whole friction between, or that balance between the KYC information and engineers in an FI versus the compliance officers, that's where the engineers do not like us at all. And can't say I blame them, but at the same time, we have a job to do. We're trying to protect our customers' money and our firm, correct? It's a tough balance, but thanks for bringing that up. We are going to get into more KYC down the road here. But first, we're going to go with a poll. For those of you who are not looking at your screen, and there's a lot of us who aren't, and we're working from home, go ahead, turn around and look at your screen if you would like to participate in the poll that I have up. Which countries do you expect to present the biggest money laundering risks? You can pick 5 if it will allow you. It's a multiple choice. We've got a lot here to choose from. For the biggest money laundering risks: Africa, Afghanistan, China, Mexico, Nigeria, North Korea, Pakistan, Russia, Saudi Arabia, Ukraine, UAE, United Kingdom, or the United States. It's going to be interesting to see what our folks come up with. In the meantime, while this is up, we'll start back with Nick. Nick, what drove you into this industry of AML? What drives you?
Well, I suppose what got me into it in the first place was a sheer opportunity and luck, really. I was working for one of the big 4 consultancies. They were undertaking what's called a look-back exercise of one of a global bank around sanctions exposure. And we spent about 6 to 8 weeks with a huge team of people in a warehouse looking through archived boxes of information to try and find anything linked to sanctioned countries. Now, that may sound desperately dull to a lot of people, but it was such a different project to anything I'd done in the past. And then it opened me up to the world of sanctions. It opened me up then into other transformational projects, and lucky enough then to spend a lot of time with the likes of HSBC on their global standards program, which took me into different markets, different exposure to the CDD, the KYC, transaction monitoring, and it was just a fascinating world. But I think what drives me with this is I think it's one of these rare sort of careers where it may be trite to say this, but we are genuinely trying to make a difference here. People trafficking, terrorism, drugs, these are real scourges on society. And, I think that the more we can try and do to help, shut these people and these organizations out of the financial system and to freeze them and to try and turn the tide on corruption in the world is a notable thing, and that's kind of what drives me in this space is, we've been at this for many years, and I think now is the time with the right technology that we can start to make a real difference in terms of actually, identifying bad actors and making sure that they cease operations.
Exactly. I couldn't agree more. Rui, what about yourself?
It was a bit different. So as I've mentioned before, I was working on the supply chain kind of process. And my previous company was in charge of filing invoices, electronic invoices. So each invoice needs to match an order, needs to match a payment. And one of the projects that we did have, we start to see kind of a suspicious invoicing pattern of issuing invoices without a proper order that didn't match a payment. And that kind of get us curious and start to dig deep and try to understand what is going on. And we actually found that some kind of suspicious activity was going on between someone on the company that we were working with that were kind of moving money away from the company as it was not possible. And that kind of got us interested to me to basically try to see how can technology could help to solve this problem and could help to detect or prevent any more of this kind of corruption that we did find and this kind of financial crime that we did kind of caught in a small scale. But it was that from that moment on that I kind of think that this is something that I'm interested in. It's something that I want to work in, and that's what got me into the financial crime world. Let's put it this way.
That's fascinating. Your desire to bring in technology to be able to help the fin crime fighters. I love that, and to bring the bad guy. In the end, it's all about bringing the bad guy to justice. Hopefully, yeah. I'm the same myself. I'm a former intelligence officer with a counterterrorism background, and I surprisingly found myself inside this industry going, wow, I can make more of a difference here. I'm still in the fight, and we are all still in the fight, which is great to know. We're going to go ahead and forward this. We've got 61% of our attendees that have answered. Let's see what the answers are. We've got 28% of Africa, only 27 in Afghanistan. It's interesting. China, 58 almost. Mexico, 43. Nigeria, 44. North Korea, what do you guys think? Oh, we've got the biggest one is Russia with 80%. What do you think, fellas?
Well, yeah, interesting. It's certainly going to gel potentially with what we're going to reveal here in a moment from our feedback. Um, I would say that if we look at something like the Basel AML index, Russia doesn't appear to be that high. Now, caveat with that is I'm not sure when the model for the country risk was actually refreshed. But Russia does appear, if I get my figures right here, it comes in as a medium risk country, number 58 out of a list of about 170, I believe. China, on the other hand, that is comes in at 21, so it's kind of medium to high risk. But some of the really high risk countries, you'd be looking at the likes of the Democratic Republic of Congo, for example, Guinea-Bissau. So we'll certainly a couple of those gel. We'll see what we reveal in a minute. Ruud?
Sorry, go ahead, Ruud.
Yeah. No, sorry. For me, I think I fully agree with Nick, and it's quite a surprise to me to see the United States ranked so up high. It was something that I truly was not expecting, but I guess the other results are kind of expected, to be honest. I guess the surprise to me is to see the United States here so up high in the ranks.
So we do have a quick question based on this poll, and I will preface before I ask this question to you and pose it to you that we can't put every country on here because number one, the poll would be too long. You simply cannot ask which countries you present to be the biggest money laundering risk and literally label every country. The one question that has come in from one of our attendees is why isn't India in the list of the poll? Is there a reason why?
I think it wasn't an exhaustive list. I mean, we just took a sub check of those, to be honest.
Okay, great. Just wanted to make sure our attendees were heard. Okay, great. Thank you for that question, by the way. We're going to move on to U.S. risk. You talked about the crypto portion of this, about the cross-wallet activity. In this U.S. risk slide, can you tell us what the solution to multi-customer cross-wallet activity is?
Yep. I can start. So it's a bit about what we were talking before. It's the KYC process. It's about knowing the customer, knowing what financial service a given customer is using, and it's not just controlling a credit card. It's just not controlling the transfers. It's controlling the whole activity of a given customer. If he's investing in crypto, if he's using faster payment types, it's basically having the holistic view and trying to understand the full activity and all the services that he has available. And even if, for example, financial institutions that are not trading actively with digital assets, that doesn't mean that their customers are not. So even for those kind of entities, it's really mandatory to have that risk approach, that even if they do not enforcement and if they do not encourage their customers to transact with digital assets, their customers can. So we need to watch out, and you need to have a clever risk strategy that looks for this and knows the customers that we have, knows the kind of investments, where the money is going to. This needs to be holistic. This needs to be like the 360 view of every customer and knowing their strengths. That's why, and I think we'll cover this later on. I don't want to enclose it. I think we'll call about the KYC and all the process that we'll have there. But I think that the answer is on that regard. Is just not, we cannot just perform transaction monitoring. Transaction monitoring by itself can give us good results, but if we couple that with KYC process that do more periodic evaluations on every customer, and if we couple that with the fraud intake or the fraud insights that we can get, we'll have a more view and a complete view of all the customers that we have and what we need to monitor and makes the detection of unusual activity way easier, because we can compare the patterns, we can compare the trends, and that makes the understanding of what is going on way easier for the analyst in the ground that needs to make decisions on a daily basis.
Great, thank you. Some people see the U.S. as the third or so riskiest country, and how is that possible? Like, others think it's entirely possible. Tell me more about that.
Yeah, let me jump in, and also I think just to set the scene in terms of what we are looking at here, guys. We allowed the respondents here. And I think we got about 500 respondents who picked the countries that they regard as being presenting the largest risk from a money laundering perspective. So it wasn't a drop-down list, and it was purely based on people's perceptions. And we did have as I mentioned before, a range of analysts all the way through to execs responding to this. So we wrestled with this as well. I mean, Russia and China, yeah, I would say are givens. And then it tails off. We got the US, which comes in third, but it's not it's not as high as the first two. And we did wrestle with this and try to understand what might be driving it. And my personal view is that it's probably a perception in terms of the respondents who, one, they may not be entirely familiar with how a country risk model is actually developed in terms of the multiple factors that go into what drives an overall score. And it may well be very much their perception that from a day-to-day perspective, the customer base or the geography that they're most familiar with could be one of the largest markets, which would be the United States. And let's not forget too, the US does have a number of fairly opaque jurisdictions, Wyoming, Nevada, Delaware, to name a few, where there are question marks, shall we say. So that's what I think it's probably. I think it's probably more a perception rather than reality, to be perfectly honest with you. That's my take.
Based on this slide here, if you're wondering, attendees, where I got the third from, it is from the left to the right on this slide, where it says Russia is far to the left, China, and the United States. I don't know if you're wondering where I got that question from, but it's number 30 at 33. Did you mention, Nick, the effects of the pandemic on that number?
I didn't, but Rue, I think you had a view on that, if I'm not mistaken.
Yeah, I guess so. So I guess, and it all comes for the conversation that the pandemic changed the way you interact with the financial institutions. What it used to be going to the branch and doing face-to-face activity, now is most likely, and I don't want to say 100%, but a high percentage, that all interactions that I now have with my bank are on a digital channel, through the mobile phone, through email, through the computer. This change interaction with customers. These open new opportunities also to bad actors. And we see the rise on the numbers of fraud on the last 2 to 3 years. So if fraud goes up, money laundering activity goes up as well. So this is a very connection between the ease, making the access to financial service easier to the good customer, but at the same time, that opened the door to more bad actors to actually have access to those services. And that makes things a bit easier to actually do money laundering. And I do believe that in a country like US, as some others on Europe, this big change or this big increase on the fraud numbers caused the same impact on the money laundering side of things like money mules, things like synthetic IDs. All of these then has the follow-up or the consequences that this increase would then increase the money laundering activity side. And I think not just these, but also I think in the last 3 to 5 years, we see a lot of new payment types. I'm not just talking about the crypto and the non-fiat digital assessment world, let's put it this way, but also on the fiat world, there is a lot of new payments, new wallets, new ways of payment that make harder to financial institutions to kind of know all the interaction that the customer have, who is he dealing with, how many accounts does he have, how the money is moving in between all of those different, let's say, digital services that he has available right now. And I think the consequence is that on the money laundering side of things, this comes with a higher risk, or at least more willingness or more openness to these kind of activities to happen nowadays.
Yeah, my knee-jerk reaction when I hear new technologies coming out, of course, I'm a compliance officer, so I think inherent risk, it's too risky, the fraud is going to go up. But at the same time, then the more I learn, the more I realize, well, electronic versus technology, when it comes to funds transfers, it's written somewhere, meaning there's a footprint somewhere that can be pulled back, can be looked at, can be traced somewhat, at least somewhat. And so it does make me feel a little bit better when it comes to all the new digital things that have come out. we can get into that in a little bit as well. So yeah, based on this slide right here in the countries and the poll we just took as well, what countries did you expect to see on the list that didn't make it?
Yeah, for me, I'd say, certainly from an APAC perspective, there's I would have thought, especially from the respondents, the likes of Indonesia, Hong Kong, for example. Malta's been in the papers recently. It's also been put on the grey list. The likes of Colombia. So I think there's a load of sort of medium risk countries that aren't there as well, which I would have expected to see.
Interesting. Vice versa. What do you think? What's on there that you were surprised about?
Well, UAE, I think, is probably lower than warranted in many respects. Again, that's subject to the FATF's grey list, and also recent challenges it's had around its compliance programs in country. North Korea. Now, I'm very surprised. I doubt anybody does business with North Korea. So I was surprised that even came into the mix itself. And, the UK relatively low. I know the UK kind of scores on the AML index around 117, so it's regarded as being pretty low. But again, we have our own controversies here as well. So that was interesting to see it quite low.
But why do you think that happened?
Well, I think it does come down to the perception of the people that responded to it, to be perfectly honest with you. And maybe there could have been part of the methodology, the way that we allowed sort of, free responses. It might have been a better way, and maybe we'll think about this for future surveys around maybe force ranking to get people to really think about the different components that would make up an overall country score. So I think there's probably maybe we need to do it in a more structured manner next time. It was just interesting though to kind of take a pulse check around. I think perception is also can be reality too. So it was interesting to have that.
Yeah, the question is what countries present the biggest money laundering? It is perception. I learned as an intelligence officer, perception is reality, their reality. That's for sure. Let's move on to KYC. Rui, you mentioned earlier on in the presentation about KYC and that we'd be jumping into it. And here it is. It's not just about AML anymore. Being in this industry long enough, you realize that. It has implications for account opening, digital trust, the whole thing. Tell us how the space is changing.
So I really think this is gaining more traction because past some years back then, KYC was just this periodic check that you do every 6 months, every year or so, and just kind of reviewing the customers and what is going on there. And I think now the industry is changing and understanding the value that the good KYC program and doing these checks on a more regular basis, based or supported by technology, can actually improve the whole experience, not just the know your customer and try to know the customer. You can even do this and see this as an upselling tool, as if you think, not just on the AML side, but mainly to help and to give better support to the transaction monitoring side of things. Because it gives you more feedback, it gives you more background, it gives you more knowledge about the customer, and then you can use to make better decisions and to be more effective and efficient on the transaction monitoring side of things. I think this is a big win. And it's also the linking both, because transaction monitoring can also help to improve the KYC process. Whatever is going on transaction monitoring can also feedback the KYC process. So if that person was ever involved into alert, if that person was ever involved even into a SAR or an escalation investigation, should be feeding points to also the KYC, so that we have that holistic view and that we know everything that is going on that customer. This should be used, and this can be used to better improve the entire journey and not just the KYC processes itself. And that's why we are kind of more talking in the perpetual KYC, in this kind of close monitoring of every customer on, I don't want to say daily basis, but on a more regular cadence that than was made before. And as we said, so this gives you more knowledge, this gives you more data and good data points to then improve transaction monitoring. This and the data is a big issue. So if you want to enable technology, and I think we'll cover this later, we can talk about artificial intelligence, machine learning models. Machine learning models need to have good data, and it's the good data that makes good machine learning models. So that's the loop that we need to feed, so that we can have proper tools and have the technology helping us to achieve greater results and at a low cost, and reduce the cost of these compliance firms, because that's also something that is a problem. The cost and the staffing problems that we'll face, and we already face in this industry. I don't know, Nick, if you have. Oh, sorry.
You mentioned digital trust earlier. Trust is a huge component when it comes to customer relationship with their banks. Can digital trust ever really fully come about? Is it obtainable?
Yes, and I kind of think that in some countries we already are talking about the digital ID. So a way to ensure that that person is really that person, that it's insured by the government. It's just not a physical card. You can have a digital ID. And this is kind of the direction that we need to go, because more and more digital is going to be the thing. We're going to be less and less paper and more digital. And this is the direction. We need to have digital IDs. We need to be ensured that that person is really who she is in a digital way, that that device is attached to that person, that that IP geolocalization is that what that person normally uses and normally interacts with the bank with. And is this like all these data points, all these digital data points that we can use that build that trust, not just to the onboarding, but for the life cycle of the customer with that financial institution. It's keeping those data points up to date and monitoring that will allow us to better prevent, to better detect on the transaction monitoring side.
Great. Thank you for going into detail on that one, because that's something I always question. All right, we're going to move forward. We have a lot more slides and limited time. Future, what does the future look like? What's it going to look like, especially for AML KYC over, say, the next 5 years?
Yeah, this is always a great question to ask, and especially when we kind of look back and reflect on where we were in the last sort of 5 years. The main observation here is, 61% are talking about, better automation, being able to collate data more effectively from, multiple vendors. Very much ties back to the previous response, Erin, and certainly something that we see, in the marketplace around perpetual KYC, because at the end of the day, we're trying to drive down costs, we're trying to improve quality, we're trying to improve our risk, having better near real-time risk decisioning. So if a customer's profile changes due to adverse media, or they become a politically exposed person, or indeed their circumstances change in terms of address information, or it just looks suspicious in terms of the transaction information versus the stated profile, we want to be able to try and flag that as quickly as possible. So being able to get that information is really important, and have it in a level of quality that ensures it is almost straight through processing and doesn't need an agent to look at it. You do that on an exceptions basis. 22% they're saying industry utilities and public sources for risk and compliance data. We definitely direction of travel want that. Now, what's interesting at the moment in Europe is that we've had a number of European countries turn around and say that having public registries of beneficial ownership information and company information is no longer it falls foul of GDPR requirements essentially. So I wonder if we're taking a bit of a backward step here in terms of the industry wants better access to up-to-date, current industry, or entity type information and beneficial ownership. And I wonder if the local regs are working against that. So we'll have to kind of watch that space and see where we go. I suppose a spurious one for me may be saying 7% here saying one commercial vendor will supply everything. I find that potentially for a challenger or a neobank or a smaller operation, I don't think that's ever going to happen in the larger organizations because, by their very, necessity of different jurisdictional operations and the size of their various business units, they're going to take a different approach, and they're going to want to have a best of breed that meets their risk appetite and meets their business goals. Plus, they've got a huge legacy estate. It's difficult to swap out existing technologies for the new shiny kit and have that across the board. So I think you've got to temper the ambition to have one commercial vendor with the reality of the situation. And then finally, the 3% with everybody still using Google. I'm glad it was 3% because, coming from in previous life, I was working for a vendor that did screening and customer screening, and we always wrestled with this around, do you use Google for negative news and searching for PEPs and all of that good stuff, and whilst it can be useful, it's not really a great standard because it's hard to have a methodology behind it. So 3% everybody's still using Google. Maybe that's accurate. I don't know.
That's an interesting one, though. It feels a little small for me, but okay. What do I know? I'm not the one that authored the report. All right. So our market challenges, what are the key findings in the market challenges in the next, say, 2 years? What are we looking at here?
Well, so I guess...
Yeah. Do you want to jump in, Ray?
Yeah, I can take the first one, and you can back me up. So as you can see, there are the top two are very neck to neck, and we have 70% on regulations and 60% on the crypto. I guess both of them, in a way, I feel that are also connected because crypto coming in, as we said before, not just crypto, but other payment types that have appeared in these recent years, have made the industry a little bit different. So regulations need to be adjusted, and to compliance programs, they need to be as well flexible enough and be nimble so that they can readjust themselves to basically cope with the new changes. And I think crypto is one of the reasons why regulations have been changed to accommodate for this. And as well, and this has a lot of impact because setting up a compliance program is not something that you do as a snap of finger. It's something that takes time, that takes resources and takes that time. And because of all of these changes in the past 2 years or so, in the past 2 years, a lot of friction has been put into financial institutions. And I think here is where, and I don't want to go into my word, into the technology, is where the technology can come in and help. But this is something that will probably happen in the coming years. So we'll have to handle with new types of interacting with banks, new payment types, new ways of trading, even digital or non-digital, fiat, non-fiat, if you want to call it this way. This is a thing, and this is here to last. I'm one of those believers, and maybe this is a bit controversial. I'm one of those believers on the digital, on the non-fiat world, and I think there's value into that. Not saying it's better or worse, but I do see the value there, and I think this is something to last. So financial institutions, I believe, will have to learn to live with them and to properly assess the risk that they bring and handle that in their risk strategy. It cannot be just a fiat risk strategy and a non-fiat risk strategy. It has to be a whole risk strategy as a whole, and this is something that needs to be addressed.
So looking at this slide here, it says of the 630 respondents in the report that were polled, regulations and crypto are the top two, it shows here. And I would agree as well, because that's always worried me, even when I was at B of A and I started seeing these transactions, I didn't know what they were. So way back in the day, that's definitely something that should have been on the radar well before that. All right, we have another poll, folks. If you're not looking at your screen, go ahead and look if you want to participate. In which areas is your AML program least successful? And you have a slew, or a plethora, if you will, of questions or possibilities here. So I'd like to take this time while the slide is up and you are answering. I want to review what we've gone over so far. Your report, Global State of AML Compliance for 2022. What we've gone over so far is, to me, tell me if I'm wrong, what I'm hearing, was some of the biggest risks and the biggest things that came up in 2022 are money mules and crypto. Is that correct, Nick?
Yeah, yes, it was. I think you said it at the start. I mean, there were 19 questions across 4 categories. So I definitely urge people to go and have a good thumb through it because there's a lot more to it. I mean, even just going back to the previous slide when we talk about, regulations and cryptos being some of the biggest market challenges. When we looked at the regulation side of things and we broke that down, it was interesting that I think it's quite evenly split with people saying that it's difficult to interpret not just international regulations, but also their own regulations in jurisdiction as well. So the interpretation of those regs and what it means for an AML compliance program is certainly a challenge, and they're ever increasing. So that wasn't a surprise to see that there. The other thing, I mean, I think we may have touched on this, or it's certainly in the report around the themes of what compliance functions are still trying to reduce costs. We're still trying to get better value and more efficiency. So reducing false positives, having transaction monitoring systems that are, really able to focus in on where the real risks are, where you can, change models, change rules quickly within a model governance framework that's appropriate, but also means you can be agile within that. So as you identify new typologies that your organization and the various jurisdictions may come across, how quickly can you translate that intel and that insight into tuning your AML systems to be able to pick that up. And I think that's something that that we all need to think about in terms of being agile, to the ever-changing threat that we all face.
Absolutely. Great. Thank you for that review. I'm just going to have one quick question from our audience. Maybe I missed this, but what industries were represented of the 603 respondents?
Yeah, primarily, I think 90% plus were financial institutions. Have a look at the report for the tail. There's some fintechs in there. There's some insurance companies. I think there may even just be some general corps as well, but the vast majority was financial institutions.
Great. Thank you for that. All right, we're going to go ahead and move on. We had 42% who were able to answer. And the top answer was, is automation technology, least successful. I would agree with that one. Absolutely. There's so many companies out there and it's so hard to figure out which one. And I remember when I was an investigator, we had to use so many different ones and it was frustrating. But thank you for participating in that. What do you think of this, Nick?
Can we jump to the next slide? Because I can't remember. I think it kind of gels with our findings as well.
Great. Absolutely.
Yeah, there you go. So yeah, certainly automation technology up there as being the least successful, and it's not surprising. I mean, I do have some observations sometimes on this, in that maybe we expect too much. I mean, certainly coming back to the lauded benefits of like perpetual KYC. And the expectations that actually maybe we can do 100% of all data points and have those automatically updating as and when is required. And maybe that's not the right answer. Maybe if you get to sort of like 65, 70% in the first instance, that's a really good win. Having said that, though, look, we live in an ever increasing, data-rich world. They talk about data being the new oil. And with that goes a slew of challenges around, automating that and the technologies that underpin all of that. So, not surprising. Staffing as well, 24% is a challenge. I mean, that's certainly APAC, we know, and for some years actually has had a real challenge around staffing, because there just isn't the talent pool out there, or it's concentrated and it keeps getting poached. I think, if memory serves me right, watchlist management for customer screening was one of the most successful aspects on the poll. We had it around 18%. And payment screening was slightly higher. I think CDD was roughly in line. So yeah, I think so.
Can you explain real quick? Maybe this is just my ignorance. What is WLM?
That's watchlist management. So your PEP list, your sanctions list, your adverse media list. Yeah.
Great. Okay, due to time constraints, I'm going to go ahead and go on to our next slide, talking about data challenges. What are the top challenges or pain points? There's so much data, so little time. How do we get it all right? What are the characteristics of effective and efficient data orchestration?
I can take this one.
Great.
Yeah, I can start, and then Nick can help me out. So data, and I think Nick well put it, because that's a moment ago, is a new oil. So I think when you talk about data, there are multiple angles to this question. We can discuss the data at the moment of onboarding, and that financial institutions need to find that sweet spot of how many data do I actually need to require from the customer, what is good enough at the point that the customer is not frustrated, and I do have the enough data to keep my compliance program running. This is one of the big challenges. Another challenge that we can see in the scope of data is how can we leverage on the data to automate and to make better decisions and to have a more, let's say, effective and efficient program. So how can I use the data to train models? And models is something that when I started to work like 4 to 5 years ago was a forbidden work in the compliance world. We cannot talk about machine model and artificial intelligence kind of techniques because they were not explainable, because they were seen as a kind of a black box and no one knew what exactly went there. And I think this perception is changing, and there is more willingness and more, this is starting to be more accepted by the regulators. And also on the technical side, there's more explainability. We can ensure that the models are not biased. The models can be explained and can be mimicked. So I think I can clearly see that the adoption of machine learning is growing, or is starting to grow on this space, on the ML space. And this is something new, because with that we can get huge benefits. But machine learning, as I said before, needs to have proper data. The model is as good as the data that is fed to the model. So this is a big concern. So the financial institution need to ensure that their data has quality, as all the right decisions are captured, all the right information is there, so that the models can chime in and make decisions. And these decisions can help in the efficiency and the effectivity of the program. And I think there's also another angle to this that I think we have started to see in Europe. I think it's on the Nordics, on Sweden, Norwegian, and Finland. There is a partnership in between several banks that they are starting to share the data, and that has improved a lot their capacity to make good decisions. So this data sharing, this data, let's say, lakes that privates can start to have, can bring huge benefits into the way that we decide and the quality of the decisions that we make. And I kind of see this in the future to be something to evolve, because now or 10 years ago, the problem was data privacy, GDPRs, and all of those constraints around data sharing. I think we are moving into the direction that we can cope with those challenges, and that we can share data with actual compromising who the customer is. That the data can be shared in a way that can help other institutions make decisions based on the information collected by another bank. And this is the direction that I think that we should moving on to be able to do a better job. And I kind of see this moving from a private to private, let's say, data consortiums, and also putting the regulators into this loop and making this a public to private kind of consortium, so that the data could be available to all the people, and that everyone could benefit in this data pool, let's put it this way, so that good decisions can be made across all the financial institutions.
I wish that could happen. That would be fantastic. Yeah, thank you for that.
Fingers crossed.
Right, exactly. That would be fantastic. So many of us have been pushing for that. All right, let's talk about crypto risk. Is the firm you're with, are they using the technology to evaluate its crypto risk exposure? Who has this one?
I can give a view on this. I was actually really surprised by this, to be perfectly honest with you. And maybe for next year's follow-on survey, we'll try and dig into this in a bit more detail. I mean, only 26% said that they effectively using technology to manage their exposure to crypto. That is an interesting one. 35% saying, look, not yet, but it's on a roadmap of 1 to 3 years, so they could be addressing it soon. 27% said no, and 12% were totally unsure. Now, maybe it also reflects the risk appetite of the financial institutions that the respondents were representing as well. One trend we've seen in the UK at the moment is essentially banks de-risking their appetite for crypto altogether. I won't name them, but there's a couple of well-known high street banks that have blocked all transactions when it comes to buying or converting crypto to fiat and vice versa. And I do wonder if that's kind of like, that's one way of getting around the challenge of not having to deal with it and the cost of the infrastructure, the inherent risk when it comes to the tuning of the models, and also dealing, I think I touched on this earlier, dealing with crypto exchanges and the risks that they represent, particularly given the regulatory nature of where we are at the moment. So it was a surprise to me. I thought there was much more of an appetite around, and that commensurate controls from technology, policy, procedures were actually in place. So it'll be interesting to see how this moves when we review in 12 months' time.
I don't quite understand how they say not yet, because isn't it just transaction monitoring program they're using already? You just tweak it to say what words it needs to look for in the ACH and wires that are coming in and out of your financial institution. So that I don't know if they understood the question, or am I not understanding the question?
Well, I wouldn't say you don't understand the question, Erin. Maybe they won't understand the question. It does come down to the perception of who actually responds to this. Maybe they haven't seen a policy that there is a set business risk appetite to say, look, if we do deal with crypto, these are our policies and procedures that are well ensconced and in play. And that follows down to the technology to control that. TM systems need to be tuned to look for this sort of pattern of this particular payment behavior as well. And as I mentioned, if you have a relationship with an exchange, there's a lot that goes with that. Because you've got to be able to demonstrate to the regulator ultimately that they have the same level of controls in place as any covered FI should have. But as we saw with the likes of FTX, clearly that's not always the case.
Yeah, exactly. Again, January 5, FTX case study. All right, let's move on. There's a few more minutes we have left, and it's really important that we talk about the summary of the key findings in the report. Who's got this one?
Yeah, look, I think as we've only got a couple of minutes, I can just summarize to say, what we've touched on here is, we've looked at money muling as being a key facilitator, whether they're witting or unwitting. It's an integral part of the scam, of the way criminals launder their money. Crypto is a real focus, and particularly when it comes to the sort of multi-customer and cross-wallet activity, because it's an opaque way of mingling funds that's not visible to the financial institution, who's effectively cashing in around the fiat around that. We touched on country risk, fairly subjective, but it was an interesting barometer just to take a pulse check. On the next slide, then we just touch on, just advance to the next slide. Yeah, so we talked about perpetual KYC. It's a key goal for 54% of financial institutions for 2022 and beyond. Unsuspectingly, crypto and regulations are key challenges over the next 2 years for any AML program. And then, finally, we looked at what was successful in terms of, what was successful in what was unsuccessful in the money laundering programs. So transaction monitoring and automation were issues. And then, we touched on cryptos as well, and what banks and FIs are doing to potentially address that, or not, as the case may be. But as I say, look, there's a lot more detail in the report. Do go in and have a look. I hope that gave you some useful insights.
Yeah, I know I've learned a bunch of stuff of what happened over the year. Thank you so much. I'm going to go ahead and ask just a couple questions we have left. We've got about 3 or 4 minutes left. I think we can hit a couple. I'm going to gear this one to Rui. Even though transactions are more digital, aren't IP addresses, behavior, and location factors banks use to block transactions to prevent fraud?
Yeah, those data points can be used into that purpose, and that's something that we already see. So it's not just the transaction information per se, but also complementing that transaction with enriching data like IP authorization, device ID, digital identification if possible. We're also going into the digital monitoring, so where we can see and monitoring stuff like logins. Who has made a login from where, from which device? Is this a known device? Is this not a known device? all of this information can be used and should be used as much as we can to prevent on the fraud side, to prevent the payments to actually fulfilled, but also as complement to the compliance and to the transaction monitoring as well. So yes, those are the points, some of those that we already are using, and we see more and more use and more customers of ours, financial institutions, requesting for those data points to complement the traditional transaction information, because that's clearly not enough nowadays.
Great, thank you for that. This next question is a two-part one, and this might go to Nick first, and then maybe the second part, Rui. Does the Feedzai report touch on AML bank fines from 2022? And did you hypothesize they have increased or decreased year over year?
Yeah, short answer, no, we didn't include that. Will I hypothesize that it's, I think, gosh, most of us can't even remember the COVID years, right? But there seemed to be a bit of a hiatus during the COVID period where there was very little regulatory activity. So I would say if, when we ran the report, we were looking at 2021, that I think it was still firmly in the middle of there being a low set of activities. It's certainly increased this year. And I think it's getting, I think the trajectory is back on course in terms of where it was in sort of like 2016 through to 2020 period, i.e. it's going north again, with regulators taking a much more active role. And I think there's going to be a lot more activity around the whole crypto space for obvious reasons.
Absolutely. And I'm going to end us because we have time now. We don't have time, I should say. We're out of it. We're going to end us because you said crypto space. And I didn't pay you to say that, by the way, Nick. It just happened to be that you're that good. If you want to know more and you have a compliance background and you want to be a member or you already are a member, we have rolled out our newest product, the first product we've rolled out in a long time. It's the Crypto Compliance Specialization. We affectionately call it the C2S. It is geared for those of you who do have a little bit of a background in the compliance space. If you're in a financial institution or even a fintech and you want to learn more about how it interacts with the on-ramps and off-ramps of crypto, and the fact that it's not going anywhere and you should learn about it anyways, and your employer will be very happy that you have the specialization. Let us know, reach out to us, and you can go ahead and buy this. We also have a not Black Friday, it is a Cyber Monday deal still going on, and if you reach out to us and let us know if you're interested. Thank you so much for being a part of our session today, courtesy of Feedzai. Thank you to Nick and to Rui, you guys were amazing. Really enjoyed the talk. I could have talked to you for about 2 more hours regarding all this that happened over 2022. And again, we should do this again in 2023, and we can do year over year differences in your report. That's something that I'm telling you to do, just your homework. But thank you guys so much for being a part of our session today, and we hope you come back and keep up the good fight, everyone.